Infotech. It's always a pleasure talking to him, more so this time around, because it's the end of the year and it'll be lovely to understand from him. How does he see the landscape in light of what is turning out to be a slightly challenging macro situation around the world? Sanjay, great having you. Thanks for joining in and hope all is well.
Thank you for having me, Raj. It's wonderful.
The pleasure is ours. So, Sanjay, can I actually first start off with a bit of a micro? Would you say that as strong as the first 3 quarters were, maybe relative to that, quarter four showed a little bit of, I wouldn't say subdued performance, but relative to that, maybe a bit of on the lower foot, if you will? And is this a one-off of sorts? Do you get back to normalcy in the quarters to come?
I don't know whether we are living in the normal world, Neeraj, anyway. I have learned a term called VUCA in the last 10 days, which I think stands for volatility, uncertainty, complexity, and ambiguity. See, the world is a VUCA world, apparently. This is something, looks like you have also learned a new term today, but this is
Yes,
what
I have.
it is. But very frankly, this quarter, yes, I would have liked to have it, a little bit more. But we knew going in that we were coming after two stupendous 9% sequential quarters, and running a ship and boat at that pace is not necessarily, it's not normal. So it takes time as you ramp up. Our focus was also on closing some large deals that were in the fray, which we were able to announce. We announced 4 large deals. But if you look at holistically for the year, we have had a good 26% growth, which I think is not bad at all. We have added 10,500 people for the year for a 46,000 people company today. That's a substantial, increase in the talent. So we are excited with what we have been able to do in Q4 as well, and we have laid the foundation for a very strong FY23. Because if you look at the exit run rate for Q4, that itself gives us huge momentum for FY23. On top of that, 4 large deals that we have announced yesterday. That will ramp up in the next 2 quarters. And we also did announce in our analyst day that there are 4 more deals that are at the late stage contracting stage. So I think where we sit with the exit run rate, the velocity of pipelines that large deals that we have closed, and the late stage contracting deals that are there, I think we're very looking forward to a good FY23 as well. So we feel good about it.
Okay, a couple of other micros. One is on what is turning out to be an issue that is continue to grapple the whole industry, which is the attrition numbers, and what you guys have to do in order to, if not contain it, at least manage it better. Do you think the hit to EBIT margins would be contained into F1 and then recovered as the quarters go by? Because I think I read a Morgan Stanley note which said that just because of the environment that is there, it's not so easy to recoup the hits that come in because of 1 quarter of fairly large wage increases.
So, I think I missed a point on your previous question. The reason why the growth was a little tepid in Q4 was because our on-site volumes degrew in Q4 compared to Q3. So our attrition problem is far more acute outside of India. So if you look at India and overall attrition for 2 quarters in a row, in Q3 also it dropped a little bit from Q2, and Q4 also dropped a little bit. See, what we report in the market is the LTM number. But if you look at quarterly annualized numbers, the attrition rates are dropping. Right? So there's a positive sign. I wouldn't say the industry is out of the doo-doo as yet. And it will take a few months as the supply, increases for, this to actually reasonably come down. But the big problem for us as an industry is the shortage of talent outside at a customer side in the US and Europe, etc. That's where, for the first time, our customers are feeling the pain of attrition. Because in my 35 years of doing nothing about IT services, I have never seen attrition higher than 3-4%. Today, attrition for tech talent for our customer is high teens, which they have never seen. Right? So that's what is causing the problem. And we all need to, supply is not going to certainly come. Right? So you got to have a growth mindset. A growth company does look for alternate supply talent pools. What we have done is, last year we announced in Q2, we hired 1,500 people in a STD model, hire, train, deploy. So you don't find the perfect match on talent who know all the latest technologies, but you find good, curious people who have basic algorithmic good knowledge, have the good ability to learn new things. You train them. Invest. So what it does is companies investing, dropping the utilization by 20 basis points, 30 basis points, but you create a new talent pool. Otherwise, you will just keep poaching from one another. It doesn't solve. Right? So you got to create new talent pools. And I think that's how growth mindset people look at things. Now, what we are doing, obviously you need to have better engagement with people. You got to take care of the comms. Inflation is at 6-7% in US. If you go with traditional 2-3% hike, obviously people are going to feel the pain. So you got to take care of the comp. But on top of it, you need to give opportunities to people to learn new things. And I think one thing which we are all suffering from, and which I think we need to bear in mind, maybe lots of people have joined us and the industry during COVID, right? They don't know any managers. They are a thumbnail on a Teams or a Zoom. They have not seen LTI or any other company. How do you create a culture? So I'm looking forward to, as people start to come in, I think there will be a sense of belonging. How do you create a belonging when you have never seen a leader? You follow a leader, you follow people that you work for. You follow a company, you see what is available, what facilities are there, what kind of encouragement and training programs are there. So I think that these are some of the things which have gotten missed out. These are the problems of COVID. There are many things which are positive as well. These are the problems of creating a culture that binds people together. These are things which will help.
Sanjay, just as an offshoot, quick thought, do you reckon that the industry, or you in particular, will get into a full-time work from office mode, or do you reckon offices will be for collaboration and work from home and office collaboration will continue parallelly for the times to come?
Yeah, so look, I have, as I said, 35 years of doing nothing else but this work. Before COVID, before February of 2019, if you had ever said we will work and operate the way we are operating, I said in your dreams. But frankly, today we all need to learn. And I have learned tremendously and never imagined we'd be able to operate the way we are operating. I don't think we'll ever go back to full-time. Okay. Right? So we have a model called yin yang model. You got to take what is best of working from home and what is required to work from office. So we do expect the leaders have started coming to office regularly now, 3 days a week. You got to have, if somebody wants to code, you got to work from home. It's an independent job. But we are not an individual sport. We are in a team sport. So people need to work together. You've got to create this culture of belonging. Right? So for those softer aspects, people need to come together and do things. They need to party. Man, all my friends are from people who I worked with. How can that change? How will you create that whole set of friendship circle is just gone away. So these are the things which are important. And I think hybrid model is here to stay.
Hybrid is here to stay. So therefore, just before I come to a couple of macro questions, one, just the following up on my earlier question, you reckon that a margin hit of sorts that comes into Q1 can get recouped in the quarters to come, or is it difficult to say right
now? No, absolutely. It will be recouped. Look, Neeraj, I don't give any other guidance, but the fact that we'll keep the net income in the 14 to 15% band. And that's the guidance we have given for the entire year, fully knowing that 290 bips hit will come in Q1 for the hike that we have given. Right? So we need to recoup that. And one of the biggest levers is the faster growth. Growth is the lever in tech services for improving the margin. If we grow faster than others, it gives you good leverage to increase the margins.
So can you look out for the whole year per se, or is the visibility for now limited to the next couple of quarters simply because of the way the macro seems to be changing around the world?
Now you talk about the demand?
Yes.
I think there's tremendous demand. Look, the macro, and this is a dichotomous world, as I said in the call yesterday as well. On one side, if you read the newspaper, if you look at the stock exchanges, you feel very depressed at times. You think there is, and the economists and the experts are totally divided in terms of whether it's a onslaught of a recession or whether nothing is going to happen. But frankly, what can I go by? I can go by the line items in the CRM. to see what opportunities are there. And I most importantly go by what our customers are telling me. The conversations with customers and the deal pipelines have not stopped. If we had 5,000 more people, we would have built all of them. So the supply side issues have stopped us, and it's not stopping. So now I can't crystal gaze, but I think there is enough work for, I think, 3 years for this momentum. This is a glory time for tech companies. The boards are, typically used to look at cybersecurity, keep my company safe. Now they're saying the only thing that has saved and helped the company survive has been technology. People are able to work remotely. People are able to, go to markets. Now they're asking, how can technology help me reach new markets? Right. So technology has become a mainstay in any of these presentations, and that is important.
Okay. I have three quick questions because I can't take too much of your time. First, on deal wins, you were amongst the first ones to tell me that a lot of deal wins, or the deals, the nature of the deals is actually becoming smaller in duration. There are a lot of deals that get probably converted or completed within a period of 1 year, and so on and so forth. And for the first time this quarter, I've heard a couple of companies say that they are signing a bunch of multi-year deals as well. Where is the balance, Sanjay, for you? I mean, is it more multi-year deals and some sprint deals, or is it more sprint deals and a few multi-year ones?
So, Neeraj, there are four things that are important for any tech companies. Growth accounts, the large accounts that need to continue growing. Invest accounts, that these are the accounts, like we open 100 accounts, out of which maybe 30 will be invest accounts, where you throw the kitchen sink and they will be growth engines for company in 2 years, 3 years time. Third is new account openings. We have opened these 100 new accounts this last fiscal, FY22. Some of them will have to become invest accounts. And the last things are large deal, because the first three give you a trajectory like this, but if you want to change the trajectory to go to a higher, large deals have to do that. Now, in the last 2 years, customers did not do large deals simply because large deals are commodity kind of work, right? They were all looking at discretionary pieces of work for fixing up their current problem, to bring people, to have the ability for people to work and collaborate. Go to their customer sets and do insurance when nobody can visit you, right? So many things that had to change in the marketplace. So it's a balance between all these four aspects. Everything is important. I think large deals will keep coming, but the size will continue to go down. But there's a lot of discretionary work still required in the next 2 or 3 years.
Okay, thanks for that. Gives me some clarity. One more question: the conflict, Russia-Ukraine, is it having some impact on the continental Europe conversations or deal conversions?
Not at all. Actually, this year, Europe has grown faster than us, including the conversations that we are doing right now, the pipeline that is there. Obviously, our heart goes out for the senseless killing and atrocious war that is going on. Our Poland offices are open for people, for food, for shelter, or some amount of warmth. We have, it touches my heart because we have seen people take truckload of supply from Luxembourg and from Denmark. A guy drove all the way to pick up some refugees to the host, families in Denmark. So people are doing in their individual capacity. We are trying to do. We have much smaller setup than what others might have, but whatever we have, we would provide and make sure that we are good citizens of the world. But to your question, Europe, there's no difference in any vertical. Everyone has a lot to do. There's no difference in geographies. I think there is tremendous opportunities everywhere. We are not seeing any drop.
Okay. Well, keep up the first part and all the best for the second part. Last question, you would have expected me to ask this to you. This whole rumor that is there, I know you will say you can't comment, but I'm just trying to understand. Is there some merit to that argument at some point of time? Because of the strong parent that you guys have, and you've told me so many times in the past, right, that having L&T as the parent is such a big boon for LTI as well. So just trying to understand your perspective.
It's a great heritage. It's they've been great sponsors. I'm always very thankful for getting this platform to and they've been open to let me try new things. I've learned the craft, right? So it's good. Obviously, I can't comment on this, and our file response with Exchange gives you the answer to, that. But SNS has been very clear that it had to happen sometime, right? And because we are in the same, industry. That's all I'd like to say.
No, perfectly fine. Completely understandable. Sanjay Jalona, all the best. Terrific work in FY22 and all the best for many more years, not just FY23.
Wonderful talking to you, Neeraj. Look forward
As
to it.
always. Thank you,
Take care.
Sanjay. And viewers, thanks for tuning in.